What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Wednesday, December 22nd, and god damn does it feel good to be back. Man, I feel like it's been a hot minute since I made a video on YouTube, but before we get into that, let's get into some formalities. As always, guys, nothing that is discussed on the channel is financial advice. It is simply financial education that I then hope people will use to understand you don't have to slave in a 9 to 5 if you don't want to. You can easily hustle 24/7 in the stock market and still accomplish all those financial goals, dreams, and aspirations you may have for yourself. As with anything, you're always going to get out whatever you choose to put in. So with that being said, let's put in some work. So most of you probably noticed, I know a few of you have messaged me on IG or Twitter or have dropped comments, trying to figure out why I haven't been recording content. So I did take a week off for the holiday of Thanksgiving. That week, consequently, Omicron did explode onto the planet and convert our lovely stock market into a chop fest. All right. So I did have some time off of my day job specifically, which I took full advantage of. And I went back to the drawing board to game plan and strategize a little better how I will make my investment choices moving forward. As many of you probably heard from other YouTubers, the strategy you have now may not work 3 months from now, 6 months from now, a year from now, right? Or you simply may find one that is more better suited for you, right? And it may consequently change, right? That is just something that is ongoing in the stock market, right? It's good to be diversified in your strategy, not just one-sided, right? When you can only play one side of a trade, you need to understand how to essentially sometimes be able to switch if you need to. I took this opportunity with the market getting very choppy and took full advantage of the opportunity of time off to game plan and strategize how I've been choosing my plays now. And I test piloted it and executed it essentially over the last 2 weeks, and it has produced some pretty hefty returns for me. So now I'm confident in sharing that with you guys today. So that's why I took a little step back from making content. Don't worry, I'm not going anywhere. As I've told you guys before, I don't know when to quit. That operation doesn't function with me. Even, to the point where literally I won't give up on something, especially if it's something that I like. And I'm very passionate about the stock market, so just don't expect me to ever step away moving forward, right? I'll take breaks here and there, but essentially this is something I'm going to stick to no matter what. But I will continue doing DD videos after the new year, or maybe next week I'll start rolling out DD videos for 2022 plays that I see have a lot of potential. Especially once we have a little better understanding of what's going on with Omicron, it'll better facilitate me to have an understanding of what will happen consequently moving forward with the market, right? But for now, we're going to stick to this strategy. So this strategy encompasses and engulfs only unusual whales and only unusual whales, nothing else outside of that, right? Normally, I would show you guys like Market Beat or Lucid Tracking or NASDAQ.com, right? I would go into a lot of different areas specifically of the stock market to try to kind of convey one simple message to deliver to you guys so that you guys could interpret it, right? This strategy that I've been using now is essentially only using unusual whales. And my day normally starts off at anywhere from 4 to 4:30 in the morning, right? First and foremost, and I come in, open my unusual whales, and I go straight into futures, right? Which is this page you see here. Now, with futures, please take this with a grain of salt. It is not a definition of what will specifically happen in the market or what will not happen in the market, right? It's just kind of a gauge to kind of give you an idea of what the market's feeling, right? What's the vibe, right? So normally if you wake up and you see that all these tickers here are essentially green, it kind of gives you an understanding that, okay, well, we're leaning towards the positive side, right? So something for you to maybe expect. If they're all red, again, same principle, right? Futures do not give you direction of the market. Nothing will, right? Anything that you have come to learn from the stock market, right? Essentially, you have to take things with a grain of salt to kind of give you a bigger picture or a bigger perspective of a play, right? So, but I do like to check the futures because it does give me kind of a game plan of what I can expect or what I should look for. Now, at the top, you're going to see 3 different tabs for unusual whales, right? We're going to go with a general flow tab, right? To show you guys the filters that I have here. I have excluded Tesla, Google, and Amazon specifically because those tickers generally have a significant amount of transactions with anything ranging above 25,000. 25,000 is the premium amount that I have preset. I have the bid turned off, leaving only the ask, calls, puts, right? For emojis, again, it's bid turned off, index turned off, ETF turned off, and volatility product, right? For anything else, It is essentially left blank until we get to the bottom. I have excluded deep in the money because, again, I want to get rid of hedge plays. I don't care to see them. I don't care who is hedging what. I just want to see things that are out of the money or people are speculating has potential, right? And then I do single leg trades only, right? Because, again, when you get multi-leg trades, you get into companies or institutions selling a bunch of calls to accumulate credit to then buy a bunch of calls, or you get the vice versa that, right? Selling a bunch of puts to then buy a bunch of puts, right? When you do single leg, it's just going to be, I want to call, I want to put, or vice versa, right? And very simple, right? You're trying to simplify things as much as possible. Nothing in the stock market is simple, but what you're wanting to do is for the data to be easily or simply processed, or at least in my interpretation, that's what I'm looking for, right? My secondary tab that I have here is simply off of this navigation page going down to Intraday Analysis, right? Now, in the Intraday Analysis, again, it's going to give you some more data, essentially that the flow gave you, but now it's specified to a ticker you plug in, right? So in this example, we have SPY. One ticker that I'm heavily watching for tomorrow is TSM, right? It'll give you a chart, give you the biggest option trades, most active chains, right? Now, the chart comes in handy because it gives you the exact price of when you're looking to play up, right? Just something for you to consider. I'll give you my plays that I'm looking for tomorrow. I'm looking at TSM for tomorrow. I'm looking at Microsoft. I'm looking at Ford. And I'm looking at HLT. For this example, we'll use HLT. This is simpler. It's less expirations. Very, very easy to understand, right? So, look. You look at the chart. You see that we're trading in 152.66 and aftermarket hours, right? Now, this is aftermarket close. Essentially, I'm recording this video at essentially 7 or 8 o'clock at night. But it tells you what the closing price was. So the first thing I would look for is in the most active change, I want to see strikes, specifically, number one, with a close expiration, with strikes within the ballpark of where I'm at now. So if I'm at 152, I want to look for a 150, a 155, a 160, 165, 170, right? I want to see things that are close that I could potentially strike to that are within the realm of possibilities, right? So when you go through here, you can quickly see you got some Mays. Here we go, a January 155, right? Well, that's essentially a $3 upside. Okay, I like that. You see a 160, that's an $8 upside, again for that January expiration. Another January for the 150, another January for the 110. This is a little bit in the money. You see a July 130, again in the money. You see this February 18th, 165, and then you see this January 145, again in the money. So we have a couple out of the money, a couple in the money, but essentially you see that it is more bullish than bearish. That is specifically something I'm looking for when I'm looking at a play I want to enter a trade in, right? You also want to pay attention to the biggest option trades. This is something I look at specifically in this page. This is why I like this page so much, right? Now, what I'm looking for here, obviously you can see a quick visual. It is way more bullish than it is bearish just from the flags or the tags alone on these options, right? But secondly, pay attention to the strike, right? 130, 130, 150, 155. Again, see these 155s? This is within striking range in my opinion. And look, for a close expiration, January 2021. And look, 99,000 and 98,000 respectively, right? These trades came in at 1:59 p.m. and, well, actually 3 seconds apart, right at 1:59 p.m. You have a couple of 150s as well for May's expiration. So now it's giving you a sentiment, right? It's bullish in the short term and it's bullish in the long term, or at least that's how I'm interpreting, right? Everybody sees things differently. But additional information I look for on this page are highest open interest increases, right? So now it's telling you what contracts are open and effective currently being held in someone's brokerage account today, right? Well, obviously we can quickly see January 21, you have 3. You have a 160, 155, and 150. It's perfect, right? Laddered, right? Right there where you want to see within range. That to me is a very, very bullish sign. When you look at that by percentages, now it gives you the breakdown by percentages, which strikes or which options have the biggest open interest increases by percentage, right? You see that the 155 for February, the 165 for February, the 180 for May, and the 220 for January 2023. On the put side, you only have one put for February 18th at the 145, which is just below where we currently are trading at now, right? Again, in my opinion, that is interpreted as more bullish than bearish, right? This next section is basically a bar graph of expirations, right? You can choose your expiration, and you can kind of see a visual of what is more bullish than bearish based by volume for open interest and volume, right? So obviously we can quickly see that the 140 stands out, the 135, and on the put side, the highest would be the 110. By volume, you automatically see that the 155 quickly stands out compared to anything else, right? If we go out to the February, which we did see a couple February's alert, once again, you see that the 150 stands out for open interest, currently active open contracts. And then by volume, you see that the 165 again quickly stands out to you, right? So this is another thing I look for in a play I'm hunting. This is one of these plays, right? I'm just using as an example to kind of give you guys an understanding of what to look for, right? Down here, you have some latest news and headlines. You have some dark pool data, which is also pretty cool that they included this in, right? If you don't really know much about dark pool data, I'm going to plug Dark Pool Wizard. Look him up on Twitter. He's part of the Just Two Trades. That guy is an encyclopedia of information when it comes to dark pool data. And again, he is part of the affiliate family of Unusual Whales, or partner family of Unusual Whales. I'm not sure if he's affiliate or partner. I don't want to miscue that or misguide that, but he is known to the Unusual Whales family. And he is someone that is a reliable source of information that is trusted. So again, look him up if you haven't done so already. The guy is awesome when it comes to dark pool data and a lot of other things too. But again, that's his specialty. That's, again, his handle is Dark Pool Wizard for that matter. So under the headline section, what I'm looking for are headlines that essentially could affect my ticker, right? Well, insider selling does have a tendency to affect a ticker, right? And as you see, there are 3 headlines discussing insider selling. But again, pay attention. One is from December 16th. The others are from November. And then you have some Octobers, right? The next piece are price targets, right? Now, I love that they segregated this so that you can kind of see what you want to pay attention to. Obviously, if it's too old, you're not even going to look at it. But price targets, you want to pay attention to this, right? Now, these are from November and October, but pay attention to where the price targets are set. We're going from 141 to 162. This is for UBS. We're going from 135 to 144, JP Morgan Chase. We're going from 121 to 132, Stanley. BMO Harris put us from 135 to 144. Trust Securities put us from 127 to 139. Raymond James, 148 to 160. Morgan Stanley again, 118 to 121. And then Loop Capital hold with a 135 price target. Well, all those price targets are relatively high. I think only 2 or 3 are under our current price. The remaining ones are in the 160s. Well, again, if we are already at the 152, that is another bullish sentiment sign that I would interpret in that sense, right? Down here, you have chains with the highest open interest. Now, again, what I look for specifically are chains that are within striking range of where I am currently trading at in the price action, right? So if we're at 152, you want to see a 155, you want to see a 160 or anything higher or right at where you are currently at, right? But again, that is what I do with intraday analysis when I'm looking at a play before I choose to pull the trigger. And lastly, you see that the last flow page is here. Now, the last flow page is pretty simple, right? You put in your ticker under the search, right? You could use, again, the original flow. I like to separate everything. It's like a 1, 2, 3 step process for me. That's kind of how I am, my mind just works in that way, right? That's just something I have to do. Again, you can do it however you choose. I'm just hoping that how I'm giving you this information is something you can use to interpret in a similar fashion, especially if you are newer to options. That will definitely help you, right? So on this flow page, I have everything turned off. You see that there is no premium, there's no spot, there's no size. All emojis are turned on, all expirations, everything is blank, essentially till I get to the bottom, right? Now at the bottom, there's 2 things I do. If I'm going to look by premium, which is right here, you can set it by premium. I turn today's trades only because I only want to see today's trades. If you turn this off, you might get some trades back here from August, October, April, right? March. That's not going to give you helpful information in my opinion, right? So if you do today's trades only and do by premium, it'll filter only today's trades by the highest premium. We can automatically see the highest premium was 183, 130 on the call side for the bears, or on the bull side, excuse me. And for the bear side, 183 was the sold call for January 2021, right? Now, if you don't want it by premium, you just want it by time, you do not have to turn on today's trades only, right? You can leave it preset and it's going to give you the very last trade executed before market close for today's date. As you see, we did have a string of bought calls for January 2021, and take a look, 1,000 premium, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, essentially $12,000 coming in right at close, minutes from close, literally 1 minute from seconds from close, to be honest. So again, information like that comes in very helpful, right? You also have a sold put. See, as you can see, it's very bullish in my opinion. But how do you take, right, the information from the flow to kind of interpret what it means, right? Well, before, I would always look up here, right, where it says bullish premium. You see that the bullish premium is outweighing the bearish premium, right? That's one indicator, right? You could go into the show charts, right, and get a visual this way, or you can use this awesome button that they just recently added, they've been talking about, that comes in super in handy, right? It's called Quick View. Hit that Quick View, and automatically it's going to give you a quick view of the flow you're looking at. Specifically, the top 5 chains by volume. You see that the 150 and the 155 stand out. Now remember, volume is not an indication of bullish sentiment. Only when it is converted to open interest do then we interpret that as bullish sentiment, right? But again, it is important to pay attention to what you're looking at, right? But seeing that the 155 and the 150 are standing out is something I would interpret as a bullish sign. If tomorrow we see that of this 1900, essentially now the open interest is increased by 1,000, that's not telling you 1,000 more contracts are currently open and held in someone's brokerage, right? You got to, again, everything is with a grain of salt. But flow levels, it breaks down today's flow by premium, giving you bullish premium or bearish premium. So essentially, of all that 3.9 or whatever the number was, millions that came in for Hilton today, did it fall bullish side or bearish side, right? And again, you see by levels, 5,000 plus, 55% bullish, 15,000 plus, 51% bullish, and then 30,000 plus, it is 61% bullish. Now, this piece is probably the most important that I like to look at under the quick view, right? Premium by expiration. So for today, going on January 21st, 2022 expiration, we have 1.37 million on the call side, 124,000 on the put side, and you see that that is broken down into 50% bullish, 49% bearish. Take a look at the next expiration, February 18th. It has gone now to 89,000 on the call premium, 23,000 on the put premium, making it 75% bullish and 24% bearish, right? This is how you interpret information that it is giving you to kind of understand what a play will do, or how I have been doing it now in this very, very choppy market, right? Now, this play works for pretty much anything, right? Earlier in the day, I tweeted out about Ford. Again, I put Ford in the ticker, in the flow, went to the quick view, and right away went down here. And then all of a sudden, you see 71%, 72% bullish, 69% bullish, right? And again, 1.5 million, 367,000, 8.99 million on that January 21st, 2022. It's another play that I'm watching heavily because, again, it does seem very bullish to me. MSFT is another one that I'm quickly looking at for tomorrow, or moving forward for these recent expirations going down. Once again, you see that we start getting pretty heavily bullish, or more bullish than bearish, excuse me. Now, this recently did have some price target increases. Again, if you go into this intraday analysis page, type in MSFT, go down, you see that the price target's going to 410, 440, 380, 400, right? You see that it's very bullish in sentiment, not only for institutional, but also when you look at the breakdown specifically, right? And the last play that I'm specifically looking at would be TSM, right? This is another play that I think I tweeted out. Snorlax actually tweeted about it. He beat me to it. He saw these large trades coming in for this, I believe it was the 127. Yeah, 127, 280,000 and 264,000 respectively, right? About 20 minutes apart. When you go down into the breakdown, you see that it is 64% bullish, 63% bullish, and 53% bullish for the 23rd, 31st, and January 7th expiration date. So just something to consider. But hopefully this video helps you guys kind of understand how I've been playing plays now recently. If it does, as always, hopefully it helps and you can start using it. If it doesn't, or if you have questions, as always, please leave it down in the comments below. Don't forget, you can always tweet me or DM me on IG, and I'll be happy to answer your questions. Other than that, guys, if you found the information useful, give me a like or a sub. Other than that, I'll catch you guys in the next one.